Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Thank you for joining us again for part 2 of our interview with Patton Gade, the National Director of Military Lending for UMortgage. Hope you enjoy. Now, so one of the biggest benefits is the zero down. Does the VA offer more advantageous rates?
For sure. Yeah, that's so at its core, what a VA loan is the VA is guaranteeing to the bank 25% of the loan amount. So if you do a $400,000 loan, the VA is actually on the hook for $100,000 of it. And so if you foreclose for some reason down the road and the bank has to repossess your property, they don't have to sell it for $400,000 to break even. They have to sell it for $300,000 at least. And then if they only sell it for $300,000, the VA is literally going to stroke them a check and say, here's a check for that $100,000. So what that does for the lending institution is it removes a significant amount of risk from that loan. Okay, so interest rate is all about risk. And so a lower risk loan is going to be a better interest rate. So VA loans are inherently lower risk, number one, and they default way less than any other type of loan. So veterans like to pay their bills. And so we're generally honorable people, right? And so they pay their bills, and so they default less. And then it's got that guarantee from the VA, which makes it less risky as well. Another thing that lower risk allows the VA loan to do is it expands a little bit the credit availability. So if you've got lower credit or you've got some missteps in the past where you missed some payments or you had something happen, and we've all had stuff happen in our life. If one of those things happened to you, it doesn't necessarily disqualify you from a VA loan, and you should talk to somebody that can look at your situation and give it a good, understand what's going on and some good advice.
That's interesting. Let's say some of your San Diego people living in San Diego, they're looking to buy a home down there, and it's $1 million.
Yeah.
So are you saying is essentially they're almost getting a credit rating for a $750,000 home because they know that?
Well, I wouldn't say they get a credit.
Not so much
for that, but it's kind of it's better than like they're getting a rate. A conventional loan at 750 is probably still going to be worse than a VA loan at $1 million from an interest rate standpoint. I mean, you're just going to get anywhere between 0.5%-0.75% lower on a VA loan than you will on any sort of conventional.
Wow. So what are the financial qualifications that they need to have?
Well, it's going to depend a little bit on the lender. There are a lot of lenders that'll go down to, as low as like a 500 credit score. And once you get below 620 or 600, somewhere in that range, the reason for your credit score being low is potentially going to have an impact on whether you qualify or not. Okay. So if you have lates, like a whole bunch of lates in the last, say 12 months, that could disqualify you from a little VA loan. But, sometimes you've had some lates in the past, you've gotten your stuff squared away, and now you're cruising along, but it's going to take maybe a year or two for your credit to catch up and start to get better. And so as long as you haven't had a bunch of credit missteps, super recently, then you may have a shot at a VA loan. But again, it goes back to what your specific circumstance is and what you might be able to accomplish.
How often do you submit applications that don't get approved?
Hardly ever.
Because you're going to do all that work ahead of time, and you're going to have a good idea before you even send it in, right?
If ever. Yeah. I can't think off the top of my head, with the exception of, I've had one where somebody quit their job like 3 days before closing. And then the underwriter, obviously a couple of days before closing, we do a verification of employment. And they're like, yeah, this guy doesn't work here anymore. We're like, dude, what are you thinking? We're supposed to close the loan on Friday, and you quit your job on Monday. Like, you couldn't have waited a week. Like, come on.
Hey, I just bought a new Porsche. Is that going to affect?
Yeah, I've had people do that. Oh, my husband just bought a new truck, and I'm like, you just killed your whole refinance. Like, you're killing me.
So let's say you have an enlisted member buys a mortgage, and then he gets shipped across the country.
Yep.
And so, how many of these VA loans can you have at a time?
So I've the most I've ever seen somebody have at the same time is 4. So once the rules are a little bit different. So once you have your first VA loan, now there is a limit to how much more house you can buy. And it depends on where you're buying, and it depends on what the county loan limit is that's set by Fannie and Freddie, what the county loan limits are in each county where you're buying. But I've seen people have up to 4 VA loans at one time. So it's pretty cool when you see somebody. I'll tell you a quick story. I think I told this on Saturday. I had a young couple that I connected with like 6-8 years ago, and they were told by like 3 different lenders, like, hey, you can't buy a second house with a VA loan. It's already used. I was like, wait a minute. Well, that's wrong. And they bought their second house. So I got them approved and got them their second house. They had a house at Fort Bragg, and they bought a house at Eglin Air Force Base. And then a couple of years later, he got out of the Army, and they bought a house in Alabama. And so now they have a third house, and those other 2 houses are rentals. And then they lived in that house for about a year and a half. And then they were like, hey, my sister wants to move into this house, and my neighbor has a house for sale down the road, a mile and a half. We're going to go buy that house. And so now they're in that 4th house, and they're basically renting out the other 3 houses. And it's literally giving them enough residual income that they don't have to, he's got VA retirement and disability, and, they don't really have to have another job and they're young. They got young kids and everything that are running around living their best life with you got those little miniature cows that are like this big, it's pretty awesome.
My favorite are the goats, though.
Yeah.
Especially how they faint.
Yeah, the fainting goat.
Those are hilarious. So in lending overall, there's a myriad of programs that, non-QM, ARMs, things like that. How many different types of loans is there in the VA program?
Well, there's really only 3. There's a purchase loan, there's the cash out refinance, and then there's the interest rate reduction loan. Okay, so the interest rate reduction loan is probably the best out of all of them. Number one, you go, especially right now where interest rates are a little bit elevated, and they have been for a while, but everybody's projecting that rates are going to come down pretty significantly. And when that happens, what's going to happen is the market, a lot of people have been sitting on the sideline. A lot of people are going to flood into the market. And so that house that might be $600,000 today, when you have 10 people putting an offer on it, that's going to push that price point up, right? So even though rates went down, you're going to pay more for that house, and your payment might be the same or worse than what it would have been if you just bought today at a higher interest rate. And then the VA interest rate reduction loan, when rates drop in the future, it's super fast, cheap, and easy to refinance that loan into a lower interest rate. And now, your loan balance doesn't really go up, but it drops your payment significantly. Plus, as everybody else is scrambling for houses, your house is appreciating in value, and now you got the best of both worlds.
And that's part of the problem why there's so low inventory, right? Is people took that ride, even not in the VA, refied at 4, refied at 3.5, refied at 2.75. Yeah. And so now they're locked into those, and they don't want to get out of that, hold on. Let me, I lost my train of thought on myself there. Okay. So you're talking about, what I read, as I was doing a little bit of research, is that can you actually put repairs into the price of the mortgage and roll that in?
Yeah, so it's something that not very many people do. There's something called a VA renovation loan. And what it is let's say you find a great house, it's in a great neighborhood, but it's, beat to crap, right? It needs renovations. Or it's got that shag rug from the 70s with a bunch of,
hey, maybe they still like that.
Everybody's got that image in their mind, right? It probably smells like smoke a little bit.
The beads in between the hallway.
And it's got that orange and brown couch sitting over in the corner,
yes,
right?
The Bundy couch.
Yeah. So anyway, so you find that house, and you're like, this is my dream house if it was only updated, right? So So what you do is you get it under contract, and let's say you get it under contract for $400,000. Then what you do is you get a contractor to come in, and before you close, and they get a bid, and let's say it's going to be $100,000 to do a new kitchen, new bathrooms, new flooring, paint the walls, do all this stuff. It'll be $100,000. We take the purchase contract and we take the quote from the contractor, we give them to the appraiser, and we tell the appraiser, appraise this as if all this work has already been done. The appraiser comes back and says, hey, this house is going to be worth $550,000 when it's rehabbed. And we go, cool. We give the seller their $400,000, and we hold on to the other $100,000. We start paying the contractor after closing to get all.
So it goes to funds control,
and boom, you've got everything, whole house rehabbed, and you're good to go.
Now, does it matter what they put? Can they put in a pool? Can they put in another room?
So there's some limits to it. They're not going to let you put in a pool, and they don't like to see structural, like if it's minor stuff. Like there's
stuff that's going to require a permit.
Yeah, you're not going to do a whole lot of. Well, it may require a permit, but they don't like structural repairs. So there are some limits to what you can do, and there's some dollar limits too. It can't be a $700,000 rehab of a house because
sure,
it has to be done within 60 to 90 days of closing, and you're not going to do a $700,000 rehab in 90 days. All right, that's good. That's a project.
Can you have co-signers?
You can. It does change the rules a little bit. And again, that's one of those things where, you can have a veteran and a non-veteran who are not married, and they can use a VA loan together, but it's going to require a down payment from the non-veteran. So those.
So let's say like a parent wants to help. Like how does that happen?
A parent can help. Sure. And oftentimes it's maybe easier and more effective to just maybe get some gift funds from a parent instead of them coming in and potentially
being on the
have a down payment and whatnot.
Okay. So what about LLCs and trusts? Can they participate in the VA?
So we can't do it. You can't do a purchase of a VA loan with an LLC. But we can do it in a trust. You close in a trust and you can refinance in a trust. LLCs are typically more for investment properties and whatnot. And so you're not going to be able, it has to be closing in a personal name, essentially.
So, a couple things that you said throughout the conversation. What if, we talked about when they move, but let's say somebody's enlisted, they get their house, they've been living in it, and then they get dishonorably discharged. Do they lose the VA loan, or what happens there?
No, once you're in a VA loan, you're good. It would be interesting to see. I think I've never run across that specific scenario, Joey. Like I'm sure maybe it exists, but yeah, it would be interesting to see if you've lost your if you got a dishonorable discharge, maybe you're not eligible for a VA loan anymore. And I don't know that would necessarily come up if you try to do a refinance. I think once you're in the system, but I could be wrong about that. That's a good question.
So one of the other things that you said is that a lot of people thought that, I used my, I came out, I used my VA loan, that was sold the house, it's done, I can't do it anymore. Is that still the case, or can?
That's not the case. So once, you could use a VA loan 30 times.
Really? For the lifetime, for your lifetime?
Buy it, sell it. It never expires. You're good to go.
So what are the rules? Like you have to sell that house and then, because it's not like a first time home buyers, right?
No, there's not really any first time home buyer benefit for VA. Now, essentially, you don't necessarily, depending on how expensive the first house is and what the county loan limit is where you're buying. Let me give you an example. The county loan limit in most counties today in the United States is $806,500. Okay. So let's say you bought a house that was $400,000. The county loan limit's $806,000. You've still got $400,000 of eligibility in there. So let's say you keep this house and you're moving from, Dallas to Tulsa, and you want to buy another house in Tulsa. You have $400,000 of your VA eligibility used. You still have that $406,000 on top of it. So you could do another house for essentially $406,000 without any down payment. You could actually buy a house more expensive than that. Still
That's what I was going to ask.
Still do it on a VA loan, but you have to put down a 25% down payment on everything higher than that 406.
Okay, so all right, so in that example, I want to buy a house that's now I'm doing well in my life, and we have two incomes. I want to buy. I got 400 left in my limit, and I want to buy a house that's 1.4 million. So essentially, I got to put down 250K.
That's right, 25% of that $1 million that's over the limit.
Okay, so not the 1.4. That's awesome.
Yeah. So and as we were talking at the very beginning, you were talking about all the different speakers and everything on Saturday. I think a lot of people go, well, the VA loan's only for your primary residence and all this stuff, but really what happens is you've got all these veterans out there, tons of people that are interested in becoming involved in real estate in some way, shape, manner, or form. And what I always say to people is like, you know what? The very first building block of this tower that you want to build, this whole life that you want to build, the first building block of it is the VA loan. Like that's what gets you started in real estate.
And what a head start you get too.
Yeah.
Because the barrier to entry a lot of the times is that down payment.
That's right.
And so if you eliminate that, now you're in the game, right? And that's truly like my kids, I tell them, you're going to buy a house as soon as you can.
Yeah.
That's the first thing you're going to do when you get your job at a college or whatever. You're going to buy houses. So I'm sure over the years you've come across a ton of people that you've helped. There's been, sad stories. There's been inspiring stories. What has been the loan that has impacted you the most from the story of the people that you helped?
I think I really think it's that young family that I was telling that, where they were denied a couple times. And then now I look back and they've got 4 houses. They've got the residual income coming in. Like they both message me, pretty regularly. Every couple of weeks or month or something, they're on my Facebook page. They're part of my life. Never met them in person. But I'll get a Christmas card or whatever and going, you know what, Patton, thank you so much for, you've changed our lives. Like, I know I can always come to you and get great advice. And, those are the things you remember, right? Is the ones where people are genuinely thankful for, the impact you've made on them. And then, you've built this relationship that lasts for potentially years all over. Like, hey, you bought a house, right? How many people get to stay in touch or care about staying in touch with their loan officer that did their house? Not very many, but you get in this veteran world, it's pretty common where, I'm texting with people, hey, happy birthday. Hey, hey, saw you had another kid. Like, congratulations. Like, I saw you named it Patton. Like, that's awesome.
So now, being the community that you're a part of, they're going to be all over the country. You're able to write VA loans. Doesn't matter if they're in New York, Florida, California.
Pretty much anywhere. My company is not licensed in New York or Massachusetts right now, but that should hopefully change here pretty soon. So pretty much everywhere else, all over the place, we can help you.
So what is the one thing all right. So our audience is real estate investors, realtors, other mortgage professionals. What would you want them to take away from our conversation today? What's the most important thing that you want them to take away?
You know what? I'd say that the number one thing is there are a lot of myths that exist out there in the real estate world. And I will tell you that the VA loan itself is the most flexible loan on the planet. And as a loan officer, it gives me a lot of ways that I can adjust things midway. If something comes up and it's not necessarily good, it gives me the opportunity to adjust things. There are people that think that VA loans take forever. They don't. They don't take forever. Like, if I get a contract and it's 21 days from now, I don't even blink. 21 days is easy on a VA loan. So a lot of those myths in the past, people say, oh, the VA appraisal is so hard. Well, guess what? The VA appraisal comes in a lower percentage of the time than any other type of loan. Plus, the VA gives you 2 opportunities to affect the value. As a realtor, you can affect the value before the appraisal comes out, and then after the appraisal comes out, you can go to the VA. So there are a lot of these things where people go, oh, these VA buyers don't have skin in the game. I'm like, what? Like, well, you're right, they don't have skin, but they left their right leg, on the sands in Iraq. Like, they got a whole leg in the game.
there's a reason it's zero down. There was other things that.
And so zero down isn't necessarily that the borrower doesn't have money. I've done some loans for some extraordinarily wealthy people that are doing zero down because they can. And like, who cares if the seller is spending the bank's money or the borrower's money or some combination of the two? You're getting the same number. Like, who cares? Let's, so that's the thing, is the VA loan is not harder. It's not something to be scared of, especially when it's in the hands of a practitioner. Like, okay, is a tank a scary weapon? Yeah, but not in the hands of somebody that's trained to use it.
Sure.
Right. And a VA loan is not scary, and it shouldn't be scary to anybody involved in it, as long as you're working with somebody who's trained in, who knows what the heck they're doing. And that's where I think a lot of the problems with VA loans in the past and some of the old myths and old wives' tales, or whatever you want to call them, that's where this came from. Is like, loan officers just didn't know what they were doing, and it was their one VA loan that they're going to see all year long, and they screwed it up. And all the realtors are now like, oh, it was the VA loan's fault. No, it wasn't. It was that idiot loan officer that screwed it up.
It's almost like, if I'm a realtor, like I'd be on the lookout. Oh, you're a veteran. Oh, all right, let's get you into a VA loan and incorporate that into the process.
Yeah, I mean, I've talked to realtors before. I mean, just recently, I was talking to a friend of mine, and she goes, "Yeah, I've got this guy. He's a retired 2-star general. And he's got another job after the military, and he's making a ton of money. He's got a ton of money, in the bank and all this stuff." And she's like, I recommended to him that he put in an offer as a conventional loan, not as a VA loan, because it would be more likely to be accepted as a conventional loan. And he was like, no, on principle, I'm not going to do it. I'm buying with a VA loan, and that's because I'm authorized to do it. I'm using it because it's the best loan ever. And he actually had a hard time getting an offer accepted because it was a VA loan instead of conventional. And I think that's a travesty. It's a travesty in our industry. And we need to do better as industry professionals, whether it's realtors, whether it's loan officers, just really educating each other and educating, sellers. Like, yeah, it's not a bad deal. It's a VA loan. It's not a bad thing. It can be a really good thing.
Well, for all the veterans out there, listening, and especially you, for putting your time with us and to educate them, I want to thank you, for your service, and for not only just for your service for your country, but also for the service for our industry, because I truly do think you're providing a tremendous service to the folks that are involved in VAs. So how can people reach you?
You know what? The easiest way to reach me is my cell phone. I mean, if you Google my name, you're going to find me pretty much anywhere.
All right. Just be careful here. If you're really going to do this,
You know what? My passion is serving my fellow veteran. And if somebody wants to talk to me about a VA loan, I mean, I tell people all the time, when I talk to a realtor, and I tell them, and I'm honest about this. If you're having a problem and you're a seller agent and you've accepted a VA offer, and I'm not even the loan officer, and you're like, wait a minute, this isn't adding up. This doesn't make sense to me. I've got questions, what can we do here? Or, what's going on? And, pick up the phone and call me, and I'll tell you what I think is going on based on, the information that you can give me. I'm here in service of the veteran. And so if I can help that veteran buy the house that you're selling, and you have questions about it, call me. I don't care if I'm the loan officer or not. I'll shoot you straight. I'll give you the right answer. And, same thing for veterans. Like, maybe you can't qualify right now, but it doesn't hurt to ask somebody, and it doesn't hurt to talk about it.
All right. So what is that contact info?
So my cell phone number is 623-866-3974.
Do you have an email?
Yeah, my email is my first initial, my last name, at UMortgage.com.
Well, like I said, thank you so much. I really, truly appreciate you jumping on, especially at such short notice. I wanted this to get out right away. It was really impactful to hear everybody involved that day. I was telling you yesterday, one of the really cool things that, between the speakers and between everybody who knew up there, each other on stage is kind of the ribbing that you guys gave each other.
So that's the most fun about all of it. I've got a team of like 15 guys we're all veterans across all the services. I mean, I've got pilots, I've got Navy divers, I've got surface warfare officers, I've got military policemen, I've got signal officers, I got engineers, you name it. I've got somebody across the spectrum. And when we get on a call together, it's always that, it's always giving people a bad time. And
I can imagine what the Army Navy game looks like in your office.
Yeah, it's good stuff.
So who's the drummer? They're all, in rock bands are always, he's just the drummer. So
yeah,
you're not gonna go there.
I don't know who the drummer is in the office. We got a bunch of people beating drums all the time.
No, what I meant was like, Navy, Army, Air Force, the Marines. Who's the drummer? Who's the one that gets razzed on the most?
I don't know. Maybe the Coast Guard or the Space Force. Like nobody really knows very many of them. I do have. I have a Coast Guard guy on my team, and then I always joke with the Air Force guys. I say, well, that was a good alternative to military service.
Patton, thank you so much.
I'm totally kidding about that. I respect your service as well.
Yes, we respect all of them. They're all necessary and they're all great. Thank you so much. I truly appreciate it.
It's been a pleasure, Joe. I appreciate you.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.